Hi, everyone. My name's Tali, and today I have the pleasure of being joined by Alex Tapscott, Managing Director of the Ninepoint Digital Asset Group and co-author of The Blockchain Revolution. Alex, thanks so much for joining us today. How's it going?
I'm delighted to be here and things are going very well, thanks.
Amazing. So before kicking things off, Alex, I'd love it if you could dive a little bit into your background in blockchain and how you initially got into the space prior to writing your book.
So I was sort of given an offer I couldn't refuse, which was the opportunity to spend all my time in the crypto space by starting off writing a book on the subject. So we spent all of 2015 writing this book. It came out in the spring of 2016. And as they say, better lucky than smart. The book came out right around the time that a lot of people were trying to understand just what this was, not just techie people, but people in financial markets, people in business, government policymakers, bureaucrats, you name it. Everyone was trying to figure out what's Bitcoin, what's blockchain, how does this work, what does it mean for me? And this book became their guide. And so the book has sold, 500,000 copies and has been translated into almost 20 languages worldwide, and really catapulted me into sort of a different line of work, different kinds of work, I should say. So I spent a year and a half really just traveling the world, giving speeches on the subject, which is something you do when you have a best-selling book. Launched a venture fund that invested in early stage crypto startups and returned almost 300% for investors. Launched a research institute called the BRI, the Blockchain Research Institute, which counts as its members many of the biggest companies in the world. And more recently joined Ninepoint to spearhead the launch of their digital asset group. Ninepoint's a $8 billion asset management firm focused on alternatives and digital assets. We think are a really key part of investor portfolios and are going to become more so as they grow in importance and mature. So that's where we're at today.
Amazing, super interesting start and perfect segue into my next question, which is diving a little bit deeper into Ninepoint Partners and what do you guys do? What sort of products do you offer? If there's anything more that you wanted to elaborate there.
Absolutely. So Ninepoint Partners is an independent asset manager based in Toronto. Our firm has around $8.5 billion, $8 to $8.5 billion, depending on the day, in assets under management and institutional contracts. The focus is really on alternative investments. So our goal is to provide investors with ways to diversify their portfolio away from traditional asset classes, specifically away from the traditional asset mix of 60 and 40 of equities and bonds. That's been basically the dominant paradigm for investors for a very long time, and it's benefited them for as long as interest rates have gone down and inflation's been moderate and markets have gone up. But we're not in those times anymore. We're in a period of uncertainty and volatility, and it pays to be diversified and it pays to be exposed to a lot of these other asset classes. So we offer exposure to commodities, to private debt, to sort of different kinds of hedged equity strategies, and to digital assets. Digital assets are an asset class that when I started writing the book were about $5 billion in value, and now are almost $1.5 trillion, and they've been as high as $2.5 trillion in the past year or so. So it's an asset class that went from zero to trillions of dollars in about a decade. And anything that grows that quickly has to be on every advisor's radar screen, every investor's radar screen. So my goal is to provide investors in Canada and globally with products that give them exposure to this asset class in ways that make it easy and frictionless to buy, right? So sometimes for a lot of investors, the concept of buying crypto assets, let alone custodying, saving private keys and so forth, creates just barriers for investing. And we're trying to create ways to make it easier. Now, to be clear, like I'm a big fan of self-custody, and I think that one of the big attributes of this asset class is that you can be your own bank, that you can engage directly with these new marketplaces like DeFi or NFTs. But also if you're just a passive investor, especially if you're a little bit older, maybe all you want is financial exposure. And it's kind of similar to the world of gold, right? So there are many reasons why you may want to custody your own gold, store it yourself, but also you may just want financial exposure to the price of gold, in which case there are ETFs for that kind of thing. So our goal is to create more and more on-ramps for regular investors to get exposure to this asset class, and in doing so, exposure to the underlying technology and what we think it enables.
Amazing. Yeah, thank you so much for that. So speaking of gold, Bitcoin has commonly been referred to as the digital gold. Do you ever see it replacing gold, or do you see it as a completely different asset class that has utility beyond being an inflation hedge?
Well, two great questions. So I don't see it replacing gold, but I do think it's going to grow in size, obviously, and in so doing may begin to crowd gold out of some investor portfolios. Our view is that Bitcoin today serves kind of a dual function. It is on one side a growth technology, something that is innovating and improving, and so in many respects is more of like a technology directional trade that's related to technology. But also we think in the long haul, it serves a really useful purpose as a low correlation or uncorrelated asset in investor portfolios, and that's where I think it has more gold-like attributes. So I think gold has a 10,000-year track record and is going to be here to stay for sure. But that doesn't mean that there isn't room for improvement on the margins or even for Bitcoin to take a much bigger share of gold. As I say, the horse also had a 10,000-year track record, and then the automobile came along, right? So I think that, and people still ride horses. They're fun, but they're not the dominant mode of transportation anymore the way they used to be. So I see Bitcoin definitely assuming a bigger role. I do also believe, though, that this concept of Bitcoin as digital gold kind of sells Bitcoin short. It really only captures one element, and that's the element that it's money, or it's a store of value asset that is not created by a government. It takes time and energy to produce. It has a limited or finite sort of supply, and it is easy to sort of self-custody and store. So in many respects, like those attributes make it somewhat similar to gold, right? But it also improves on gold in a lot of key ways. It's easier to move. It is easier to store. It's divisible into small increments, so that makes it useful for payments. And it's impossible to forge. Now, you can't forge gold, but you can definitely scam people into thinking they're buying gold. With Bitcoin, because these are crypto assets that transactions exist on a blockchain, which is an immutable ledger anyone can see, it's impossible to sort of send the same Bitcoin twice or to forge a Bitcoin. And that makes it, in my view, very attractive. Also, it's important to note that Bitcoin is a technology that's only about a decade old, and so as much as it has achieved in that period of time, and its achievements are significant, it still has much more to grow. So I think that already we don't need to say Bitcoin is only a store of value. Bitcoin also does lots of other things. So in many parts of the world, for example, in Nigeria and elsewhere, Bitcoin and digital assets, crypto assets more generally, are used as a store of value, but also as a medium of exchange. We're seeing crypto assets becoming especially useful in places where traditional payments are difficult, or where there's the risk of seizure or censorship. So, this is a politically agnostic comment, but it can apply to just about anything. So if you're funding a trucker protest in Canada, or if you're funding the Ukrainian war effort, or more recently, if you're directing funds towards to Planned Parenthood or to pro-choice groups, and if you're worried about reprisals from family members in a conservative household, then maybe you want to use a medium of exchange which keeps your information private, right? So there are plenty of reasons why it's useful for people to have a form of censorship-resistant money that they can spend peer-to-peer, and we are already seeing many clear and significant examples of that just in the past year, and have for many, many years. So I think that we already know that Bitcoin is useful for many other things, and I think that that list is going to continue to grow as the technology evolves.
Great explanation, Alex. Thank you for that. And I love that analogy with the horse in the car. I'm definitely going to use that in the future. So let's pivot a little bit here into current markets. Bitcoin has declined 38% since the start of the year, from approximately $46,000 to a low of just under $30,000. There is a tendency for Bitcoin to move in the same direction as the Nasdaq. Do you think that there's a notable correlation between the two? And if so, then why do you think that's the case?
It's certainly been the case recently, but historically has not been so. So for the past 5 years, Bitcoin has had a low to no correlation with most other asset classes, whether that's, you want to use an equity index like the S&P or the Nasdaq, or for that matter, many other kinds of commodities, basket of bonds, even other commodities like gold. Generally speaking, it tends to march to the beat of its own drum historically. But we have seen that start to change a little bit recently. In the past few months, the correlations have increased to equities, especially to the Nasdaq, and I think that's a very interesting, comparison, because in many respects, at least for the past couple months, Bitcoin's basically traded like a FANG stock. It's a large cap technology play that is roughly the same size as a lot of these other entities. It's about $1 trillion, kind of like Amazon, kind of like Google, kind of like Facebook until recently. And it's down roughly the same. Amazon's down a bit more, Google's down a bit less, but generally speaking, 35 to 45%. So, on one hand, that's a sign that the market is maturing, that it's more widely held, that it's being used as a source of funding and liquidity for more mainstream investors who are taking risk off the table. So in a way, that's a sign of market maturity. The counterpoint, of course, is that if you believe that Bitcoin is useful as an uncorrelated asset or as a store of value, then the fact that it's maintained this correlation kind of undermines that argument. So you have to wonder, or you have to decide basically, is this a short-term trend, or is this something that is going to continue or even strengthen in the sort of months and years to come? I think it's too early to say, but my view is that in times of extreme liquidity tightening, where basically people are looking for funding to move money out of risk assets or to store value, lots of different things get hit. And that's been true not just for stocks, but bonds and even things like gold. Gold isn't exactly performing great so far this year. And if you look at past crises like the 2020 liquidity crunch when COVID was just starting, or even the financial crisis, lots of other asset classes correlate to one during times of liquidity crises, even gold and even bonds and all these other things. So really, still to this day, the US dollar remains that primary source of liquidity and store of value. And that's been true historically. Now, what does the world look like in 5 years or 10 years? I can't say, but I do believe that Bitcoin is going to grow in size and therefore in price. And so if you look at a world where Bitcoin is $5 or $10 trillion in value versus say 800 billion to $1 trillion today, then it's in and of itself is going to be perhaps a source of liquidity for others, meaning so people might sell out of other assets and actually store value in Bitcoin. So too early to tell, but fortunately for me, our investment thesis doesn't rely, fortunately for investors, not just for me, but our investment thesis doesn't only rely on this store of value concept. I think that you can have your cake and eat it too with Bitcoin. That yes, it's true that in the long run, it could be a hedge against other assets or a store of value, but it's also true that it's a growth opportunity that gives you exposure to a technology that's kind of important. And to me, that's very exciting as well.
Interesting. So in your personal opinion, do you think that this is a healthy correlation, or would you like to see it break away?
Well, it's already starting to break away a little bit. So actually in the last 7 days, we're recording this on Wednesday, May 25th. So in the last 7 days, the correlation to the S&P has gone from about 0.78, which is to say highly correlated, to actually negative 0.14. So it's actually broken the correlation recently. But this is something that happens in and out like waves, right? So we can't extrapolate from 1 week of trading activity how something is going to now trade for the next 10 years. But we are seeing that it does occasionally break away. I would say in general, let's say for the next sort of 3 months, I think it's a healthy correlation because frankly, I think all markets are bound to or due for a bounce. And so we'd like to see Bitcoin participate in that bounce. FANG stocks are going to go up 20% or 15% from here, then Bitcoin should participate in that. Long term, though, obviously, I would like to see it trade more independently from these other asset classes, because I think that that is going to be one of the sort of key attributes, of the asset going forward.
Very interesting. Well, thank you. You already answered my next question in that. So I guess I'll jump forwards and ask you your opinions on how do you see tighter regulations as a potential sustainable long-term solution to preventing scenarios like we saw with UST?
Well, let me start by saying regulations are not inherently bad. I think there's a misconception that, DeFi and crypto as an industry is growing just fine on its own and doesn't need regulation. I actually don't think that's true. But I do think that there's probably a greater risk to getting the regulations wrong than there is to leaving it be. So I think that that's something we need to be very careful and considerate about, which is how do you balance the prerogative, which I think government should have, of encouraging innovation and economic development and stewardship with the real legitimate protection of small consumers from financial excess or from mismanagement or fraud or whatever. And that is a legitimate balance that needs to be struck. What concerns me about some of these regulations is that they start with the premise, or some of the proposals, they start with the premise that crypto assets are inherently useless or speculative. And so therefore, the only thing that's needed is tighter controls, versus the premise that this is a technology that is enabling new forms of problem solving. It's helping to address challenges and overcome them in financial services. It's empowering content creators through NFTs. It's enabling a more private and secure and decentralized internet with Web3 that's helping to maybe spur some new models for organizing capability, like DAOs, like all this stuff that, in my view, are super duper valuable. And so we got to figure out, okay, well, how do we encourage all that while also maintaining some level of consumer protection, and also some other concerns around like terrorism financing and anti-money laundering, though all the evidence suggests that crypto is not used for that stuff at all, and it's a bit of a red herring, frankly, but still it's something that ought to be considered. And that's a really tricky thing. So there are examples of plenty of people in government in the US, Cynthia Loomis and Kirsten Gillibrand and others, especially at the state level in the US, that have taken a really enlightened view of this technology. And to their credit, the White House has done something similar. They released an executive memo, not an order, but a memo, basically mandating in essence that every government agency in the federal bureaucracy develop a strategy to deal with this asset class, which I think is quite interesting. And if you read the the content of their memo and subsequent communiques, it's very positive and quite nuanced. So I have a lot of hope that governments can get it right. I think it does require a great deal of conversation and dialogue with industry, but I think at least in the US, the industry's armed itself with the resources and found the right people to influence, and I think that it's headed in the right direction.
Great, thanks. And I'm curious, what are your thoughts on NFTs, super briefly, and how they fall in place in this entire ecosystem?
Well, I think NFTs have done a lot to help mainstream this technology, but I also think that that's a double-edged sword, because on one hand, everybody can appreciate a cultural asset, a song, a piece of art, a cartoon, what have you. Like these are things that are not crypto related, they're culturally relevant, right? And so that's great. So now lots of people are interested in this stuff because of the popularity of an artist or a musician or a project that they want to get behind. The counterpoint is I think it probably undermines the legitimacy of the industry a little bit, that people spend millions of dollars on NFTs of profile picture projects. Honestly, I think that's just something that to the average person is very confusing, and I think has been a bit of a disservice. But putting that aside, I think NFTs are a key building block of Web3, and I think that as a concept, they're incredibly important. They're incredibly important because lots of assets are unique or scarce, and one of the most important kinds of these assets is actually elements of our identities, right? So every Mona Lisa, or like the Mona Lisa, is unique, and every song is unique, and what have you. But also you're unique, Tali, and I'm unique, and there are elements of our digital fingerprint that are only ours. So in other words, we can use NFTs as a way to codify our digital selves online and to take elements of our identity with us through the internet. See, today the problem with Web 2, or the way the internet works today, is that centralized platforms like Facebook and your bank and your government and so forth own all this information about you. And it means that you can't decide how it's used, you can't monetize it, and it could end up in the wrong hands. So what Web3 promises, what crypto promises, is the opportunity for you to own your own identity and your own digital assets and take them with you. You don't have to be locked into the Facebook ecosystem or the Fortnite ecosystem or the Apple App Store. You can be your own sovereign individual that owns their digital self. NFTs are really important to that, not only as an asset within your sort of wallet as you travel through the web, but also as yourself, right? I do think that we'll be able to bootstrap identities using NFTs as a key building block.
Definitely. So what you're saying is that blockchain technology then has the potential to really protect our personal data and take back that ownership.
Yeah, I do think so. I think that that's only true though if you take a self-sovereign approach, right? So this is important for people to understand. I don't want to get too down the rabbit hole, but if you use Coinbase or Binance to buy Bitcoin, you're not really engaging in a self-sovereign, decentralized sort of experience, right? You're relying on a centralized order book or platform to speculate, on the value of an asset, right? Which is fine. Like that's a totally legitimate thing to do, but you're not engaging in Web3 when you use Coinbase, right? You're engaging in Web3 when you have your own wallet, let's say MetaMask wallet, and you're connecting directly to a DeFi protocol, or you're moving assets over a bridge between different blockchain ecosystems. This may sound like a bunch of gobbledygook, but basically it's sort of like the idea of using AOL as a closed ecosystem or using the open web, right? So I think that in the early 90s, using the open web to search for information, to communicate seemed kind of anarchic and primitive and kind of difficult to use. And that's true for a lot of technologies. And I think that's probably going to improve over time for blockchain and crypto in the same way that it did for the internet as well.
Definitely, definitely. And I mean, speaking of, if anything, current events have highlighted some of the risks that can be associated with cryptocurrencies. So what, in your opinion, are some of the biggest flaws that currently need addressing in order to achieve mass adoption one day?
I think that there's a cult of personality around certain figureheads in the crypto industry, and an overwhelming trust that some people have in those people. So this Terra Luna sort of situation is a good example. There's some people that speculated on the value of the underlying blockchain or own some UST as a tool that they used in DeFi. And then there are other people who use UST as basically their US dollar bank account. And we're using this thing called the Anchor protocol to earn yields on dollars. And they're like, you're a sucker because you're earning 0.5% at your bank. I'm earning 20% on Anchor, which worked until everybody went belly up, right, and lost all their money. So I think people need to understand that this is still experimental, and some of it is still experimental, in its early stage, and you are definitely speculating a little bit when you engage with these technologies. So don't bet the farm. Take a measured approach, do your own research, and that's something that we advocate too at Ninepoint. We've got some great educational resources on our website, our YouTube channel. I host a regular podcast with Andrew Young, who's the project lead at SX, a great blockchain platform. I would encourage everyone to check out. And for us, it's all about understanding what it is you're investing in before you step in, or certainly before you jump in with both feet.
Amazing. And I think that's a perfect note to leave things off on. I really appreciate you taking the time today to explain these concepts to our audience, because I really do believe that education is the best way to share knowledge and protect these individuals from everything that's happening. So it's been a pleasure chatting with you. And before we leave things off, Alex, I know that you and your team at Ninepoint Partners are in the process of releasing a book called The Digital Asset Revolution. Do you want to tell us a bit more about this book and when's it expected to release?
Yeah, absolutely. The book is a product of the Blockchain Research Institute, which is a think tank that I co-founded and remains today one of the sort of more influential independent blockchain think tanks in the world. Ninepoint was a key collaborator in this project. The introductory chapter is in part based on a major research project that Ninepoint helped to co-sponsor. The book is really in my view, a great starting point for anyone trying to understand digital assets. It's called Digital Asset Revolution. It's on Amazon, available for pre-order now. A lot of really smart people in this industry, including the former head of the Commodity Futures Trading Commission, think it's required reading, basically, and have said as much in our endorsement. So I'd really strongly encourage people to check that out. It's going to be a terrific resource, well worth the time and investment in picking it up.
Amazing. Thank you so much. And I'll definitely make sure to grab a coffee. Thanks so much, Alex.
Thanks, Tali.